Hey everybody, Gary with Basecamp Trading. Let's take a look at a nice short setup we had in the euro this morning. The euro had already triggered a daily bear flag yesterday. So our bias coming into the London session this morning was already to the short side. As always, we pulled up our 240-minute chart. We were on this bar right here, but it was up here at that time. The euro had made just a little pullback. And so we drew our trend line across the bottom, and we were waiting for a break of that trend line to signal a short trade on the 240-minute chart. And you can see that trend line broke, pushed down nicely. We actually hit significantly undervalued on the 240-minute chart during the London session. So we actually had quit trading the euro short at that point. It was very bearish, and you can see even in the US session it continued to push down a little bit. But when we hit significantly undervalued on the 240-minute chart, we typically are either done trading in that direction for the morning, or at the very least very cautious trading in that direction for the rest of the morning. Our 30-minute chart, we were watching to get a confirmation there, and we were right on this bar right here when we came in this morning. And as I said, the euro had made just a little pullback. It wasn't a big one, but it kept leaving these topping tails on the 30-minute chart. So again, confirming our bias to the downside. We didn't want to actually get short though, because we had support right here on the 30-minute chart. The low on this bar was 1.11700. The low on that bar was 1.11700. So at that point, we're thinking, okay, the euro has some 30-minute support, and we need to break through that to keep going lower. So we kept an eye on it. The 5 EMA crossed underneath the 13 EMA. The 50 EMA was breaking underneath the 200 EMA. And then this bar finally triggered us underneath that 1.11700. So we got short the euro, and you can see the euro again was pushing down nicely. And because we had confluence off of the daily chart and confluence off the 240-minute chart, we were comfortable staying short the euro. Push down, we hit significantly undervalued on that bar. We hit it again on this one, hit it again on this one, hit it again on this one. Again, confirming just how bearish the euro was this morning. Typically on the 30-minute chart, you don't get hit that many times down in here in the undervalued area and keep going. We know that typically we hit significantly undervalued on a 30-minute chart. We're looking for pullbacks and consolidation, possibly even reversals. But again, the euro was just very bearish this morning, so we were staying short the euro. Our Unirenko chart is our primarily trading chart. And right in here is where the euro was making that little pullback. And then right there, we had our wick out of the cloud. We were triggering that break of 1.11700. And so we got short. And we just followed this all the way down into this area right in here. That's when we were hitting significantly undervalued on the 240-minute chart. So we went ahead and took profits, and we had quit trading the euro for the morning in London at that point. Again, as you can see, the euro was so bearish it just kept pushing down even in the US session, but that's because the higher time frames were in confluence. You had the daily bear flag trigger, the 240-minute trend line trigger, and the 30-minute chart was just bearish, setting up bear flag after bear flag. But it was a nice run in the London session, good for more than 4 targets to the downside. A very easy, kind of no-brainer setup in the euro. Everything lined up nicely, and those are the conditions that we like to trade in, because that gives us confidence in the direction, and we don't worry about getting into the market at that point.